Folks, this live stream is brought to you by my sponsor AAA FX. Now, they're a fully regulated broker in Europe and South Africa, offering Forex indices, commodities, crypto, and over 100 stocks. Now, at AAA FX, you pay no commission on any Forex pair using their ECN Plus account and low commissions on cryptos and stocks. Plus, you can deposit with cash or crypto, get a free VPS with deposits over 5K, and easily integrate the well-known copy trade service Zulu Trade. While you're waiting for the stream to start, go and check them out by clicking the link in the description, comments, or visit AAAFX.com.
Good morning, ladies and gentlemen. I misspelled my name. Oops.
Good morning, everyone.
Our name. Welcome in. FOMC day.
Gotta get this chat going. Where are you guys from? Drop your location, drop your any pairs you guys are looking at. Let's wake this up and let's get going. We have a lot to go over. This will be our last Wednesday live stream for a little while, so we gotta take advantage of it while we can. Good morning, everyone.
Morning. Grab your coffee, your juice, your tea. Get your measuring cup again.
See, I love this thing.
I've got a Supreme Court of the United States mug.
Aiden thinks he's cool. What's going on, guys? Good morning, Indonesia, Netherlands. Where you guys from? Let's wake this up. Let's get this popping. Let's see if I can play any music here, man.
Yeah, what are y'all looking at? What pairs specifically? What setups? We want to try to make this interactive as much as possible. So we'd love to hear from you.
Nigeria, what is going on? London, we have you guys on today. You know, I was reading an article, guys, a while ago about how coffee, you have it first thing in the morning. There's this I don't remember what it was called. There's this chemical or hormone or whatever in your body that makes you obviously naturally groggy and tired in the morning right when you wake up. So it's actually not good to have coffee first thing in the morning. If you wait an hour to an hour and a half after you waking up, that hormone or whatever drains out of your body, and then that tired feeling goes away after you have had your first cup of coffee after an hour of waking up. I never knew that. So why am I drinking coffee? I don't care. I need it.
Yeah, coffee's actually not bad for you. Lots of antioxidants as well.
Yeah.
As long as you don't load it up with sugar like I do.
Yeah. All right, Dallas, Texas, Atlanta. We got GCAD, we have EU, we have UJ, we have cable, we have pound, we have Euro USD.
Yeah, coffee is life, bro. We got Zambia in the house.
Well measured. Yep.
And we got two people from Zambia.
All right, so what we're gonna do today, guys, is I'm gonna go over just a few trades, or a few, well, not trades, but areas of interest that I'm looking for. And then I'm going to turn it over to you guys. See what you guys want us to go over. We can try to break some stuff down. To be quite honest with you, I really don't see a ton of stuff this week. You know, it has been a pretty erratic week, to say the least. So, I mean, it is what it is. Sometimes we have those weeks.
So what happens oftentimes prior to these monetary policy events, like we're seeing with USD today, with GBP, I think Euro as well tomorrow. Oftentimes prior to those events, you know, there's a lot of choppy price action and, you know, a lot of seek and destroy, right? Engineering liquidity on multiple sides of the market. So it's oftentimes just kind of best to sit back and wait for these events to happen. Wait for some conviction behind where price is going to be heading for the foreseeable future.
Yep. You don't need to be forcing anything, you know?
Yeah, bro, UCAD did play out very nicely. That was a beautiful trade yesterday. Called that one out weeks ago.
Vancouver, what's going on? All right, guys, we'll get started here in about 2 minutes. Just want to wait for more people to trickle on in. As you guys should know or already know, we do not trade anything but Forex. So please, please, please do not ask about gold, US 30, NASDAQ, or anything else.
Nate, are you playing this through the stream itself, or is that just on the speaker?
Yeah.
I didn't know you could do that.
Mm-hmm. Cool. So I know I originally said, guys, you know, on our last live stream, I think it was 2 weeks ago, we didn't have one last Saturday. We were extremely busy over the weekend. That we were going to be dropping that course for you all on the 14th of February. Well, it turns out that, you know, we're not as far along in it as we had expected, and we don't want to rush it. We want to make it as best, you know, good as possible, and we want to give you guys the most value. So, you know, we're going to take a little bit more time with it. We're going to make sure that we have everything that we need. So it's probably not going to come out on the 14th. It will come out this February for sure, but it may be towards the end of February. All right, let's go ahead and get started. So I'm going to share my screen here, and then I'm going to have Aiden go over his pairs. So let's do it. Actually, I can keep you here. You see this? Hear me all right? Everything's good?
Yeah, I have you.
Cool. All right, so everything highlighted in red. I'm actually going to let Aiden go over USD CAD because I guess he took that trade. He called that one out. Well, we all called it out a long time ago, but I'll have him go over a few USD pairs. So within AUD USD here, obviously higher time frame, and it has to be this simple, guys. You know, it's a point to make it simple. You know, the more complicated things are, doesn't mean it's better. So what people would try to do is they would scale into a lower time frame. They may see something like this. I don't know. They may come up into, you know, some sort of area. I have no idea. Like in here, see a little bit of a break of structure, and then try to take it short. Well, all reality, we're higher time frame bullish. It may have come into this level here and could easily just continue on. So we just have to be very, not necessarily selective within our trades. I mean, yes, we do need to have our rules and confluences there, but at the end of the day, just make it simple for yourself. Understand that you don't have to be forcing anything. I mean, you guys probably know, I mean, everyone has forced trades at some point, myself included, and you learn the hard way. You want to be involved in the market, and then all of a sudden you lose, and you're like, okay, I'm not going to do this again. I'm not going to force trades again. But then guess what happens? Your psychology gets to you, and then you end up doing it again. It's just like any bad habit. You feed into that temptation, and it's not a good thing. So higher time frame, let's just keep it simple, right? We're in an overall uptrend. Yes, at any point in time, we could see an overall retracement. Right, we could, definite possibility. However, we're not there yet. Have we retraced? Absolutely not. So we're still trading long, right? We need to be looking for continuations. So within the most recent area of supply, I mean, originally this was right here. So we had swing high, swing low, swing high, swing low, swing high, swing low. So where was our most recent structure point? Right here? Obviously that was taken out, and that was really expected. You know, we said that if we're going to react, well, we could react off of, you know, either one of these three levels, 1, 2, or 3. Higher time frame, we have come into an area of demand. Remember that? Whoops. Remember that 2020 repricing that we had? The 2020 crash? Yeah.
It sounds like people are struggling to hear you over the music.
Yeah.
I'm asking you to turn it down a little bit.
There we go. We'll just do that. Sorry, guys. Anyway, so we had the 2020 crash, right? We had the sell-off, major dollar strength. Sell to buy, we had that repricing. We finally came into it here. So yes, technically we are still bearish. However, dollar on the higher time frame is extremely weak. We have come into a higher time frame level of supply on the weekly, right? And we're just falling here, right? This is just low resistance. Trickle, trickle, trickle. When we start to go the opposite way, we can really go. So I really do not expect price to go short at any of these levels. These would be good for take profits for our longs because these are levels of supply. These are levels in which price could potentially see an overall pullback before continuing. Definite possibility. So that's where we need to be taking profit. But I fully expect price to just absolutely moon, even take out this high, at least come into 770. So lower time frame, obviously we're lower time frame bearish or bullish as well. So we need to continue to be looking for buys. Well, what happened yesterday was we had a run of liquidity. So obviously we took a lot of sell side liquidity in here. We ran it. We kind of filled in balance. I mean, I wasn't looking for buys in here just because this is all intra-trend structure, right? All of this is intra-trend. And you really don't want to be buying off of the intra-trend structure when we break. Meaning when price breaks the most recent swing point to the downside, you want to be looking for higher time frame levels of demand. So let's just say there was a clear repricing right here. And then we started the little trickle. Well, then you wouldn't be wanting to take price off these intermediate levels of demand. You want to be taking off the higher time frame because it's the same thing lower time frame, right? If you're trading, higher high, higher low, higher high, higher low, you wanting to get into discount every time you're buying. Same thing with selling, you want to get into premium. So same sort of deal here. This is just one expansion, could have been an overall pullback for a higher high. Same sort of deal applies. So, in this case, we didn't have a deep pullback. We actually, filled in balance a little bit. We swept sell side liquidity. So, it is what it is. And then what happened was we had this little repricing event, a little doji. I like to see doji candles form at repricings. They're not always necessary. It's just a good indication that, hey, look, we're probably going to, this could be a potential area of demand that we react from. Meaning when we have that sell to buy and we reprice and we stop and make a higher high, it's definitely a possibility. Now, I would not say that any of this is any sort of real pullback. That's not a pullback. That's not a pullback. That's not a pullback. That's not a pullback. So could this just be a thing where we go like this and go like this and we start the real pullback phase? That's a possibility. However, dollar is still extremely weak. So I would definitely want to be using it as an excuse to look to continue to buy it. So this could be the overall retracement. We could easily see a higher high now. So retracements down into this level of demand could definitely be on the table. It's not as highly probable as other setups of the like. However, I do like it. We're continuing with the trend. We're continuing with correlation. Dollar is still weak. We want to be buying XXX USD. All right, so that's AUD USD. CAD Swiss franc. So we're going to be checking out CAD Swiss franc here and kind of just seeing what happens with it. Higher time frame, you can't fight it. We're in a range. We're just chopping around. However, what happened, I think this formed last week, last Thursday, is, we created a high, we created a low, and then we created a higher high. Okay, we did create a higher high, so we want naturally a higher low. We swept a lot of sell side liquidity here, sell to buy, then we kind of repriced, and that's where we went long again. So now we're starting that trickle-like formation back to the downside. So I figured, okay, great. This is a great opportunity to get in long from this level of demand. If you're not already long, do not long this right now. What we'll be looking for is essentially just a failure to make a lower low. If we can get something like this, even if we scale into a lower time frame here, we can see that we're starting to build liquidity, right? We're starting to build that. So what we could see is that sell to buy. If we get that sell to buy here and we break this structure, that would be really good for a pullback to continue it, for continuations. So we've come into our overall level. I have a small position here. So just in case we just absolutely just blast off and there's no confirmation. But if we do get confirmation via a, liquidity purge, sell to buy within this zone, maybe filling some imbalance in here, we have a little bit of a lower time frame imbalance there. That could be potential, sell to buy into that, break the counter trend, really see the momentum shift to the buyers. That's what we would be looking for pullbacks to long. Okay, so if you're not already in this trade, don't force it, right? Don't get in right now. Just wait for the new setup to come around. There's always going to be something on some sort of pair, right? Now, let's say this doesn't happen. Let's say we don't get the sell to buy. I have no idea if that's going to occur. If it does, we'll take advantage of it because that's our typical setup. We want to see liquidity purge in the opposite direction of trend, price to push long, break counter trend structure, pull back, mitigate either into a level of an imbalance, demand, or sponsorship, and then continue long. So that's what we're going to be waiting for. And if that doesn't happen, then there's no additional trade. We don't want to force anything because at the end of the day, guys, it's just a game of probabilities. If the probability is not high that you're going to win the trade, probably shouldn't be taking it, right? All right, so that's what we're going to be waiting for. Currently, there's no setup on this besides the one discussed in VIP a couple days ago. Chef JPY. So what's interesting about Chef JPY is I really do think we can see continuations long here. So I mean, first and foremost, where are we headed? Are we higher time frame bullish or bearish? We are definitely higher time frame bullish. If price ends up going like this, people will say to me, well, it was bearish right here. I mean, why shouldn't we be selling? I mean, yeah, you could be, but just from a realistic standpoint, we haven't broken structure yet. We are still higher time frame bullish. All right, so we have to treat it as such. If it goes short, oh well, fine. Then we can shift our bias and look for sell side to be taken, right? So at this current time, we're bullish, higher time frame, and we're bullish lower time frame here as well. So I'm gonna go down to like the 15-minute, just kind of scale into each and every zone here. So we had that reaction from a higher time frame level of demand to the left. I'm not going to really discuss that. It would take too much time. Anyways, had a level of demand here, pushed up, pushed down. So higher high, higher low, had the reaction. Trying to just try to scale out a little bit. So this counter trend was broken because low, high, low, high, low, high, failed to make that lower low. And that's where we started the uptrend again. Okay, so really this is that repricing event here, that overall level of demand. Yes, we came into it once, but we ended up coming into it a second time. That's okay. In the process, we swept sell side liquidity. And what is this, guys? Retail head and shoulders fake out. Retail is going short below that neckline. And then they get stopped out when price comes back to the upside because they're placing their stops right here. So we can see that as an institutional manipulation short into that repricing event to go long, higher high, naturally higher low. And that's exactly what occurred. And it happened to be probably a 99% retracement. Now, you could have easily taken it off of, just somewhere in here, just in discount within that level of demand. That would be fine. It just ended up retracing a little bit further. And if we go down to, it ended up being the 1 minute, not to say that we trade the 1 minute, right? But if you just keep scaling in to find out why it stopped there, that's exactly why. So we came into really our last point of return on the 1 minute time frame, that last selling volume to buy. All right. So we scale all the way over and we can see that we mitigated that low, high, failed to make that lower low, higher high. That would have been a phenomenal trade to take off of that demand here because that was the break of the counter trend, not the counter trend like trend line, because we don't trade trend lines. If you drew it like this, yes, it's an actual break of the trend line, but is it a break of the structure? Well, not yet, right? This is the low. This is the high, low, high, low, high. We could have easily made a lower low and then a higher high, but we didn't. We stopped and then made the higher high comparable to that previous swing point. So now that turns into that supply to demand flip. So let's just keep going with the mitigation train, right? We mitigated that level again. Low, high, low, high. We had the reaction. So I guess you can call it a type 1 setup would be, well, first and foremost, you could have easily just placed a buy limit there and would be in great profit. You could have also have waited for the reaction, the pullback, the continuation. Or what you could have done was the reaction, the failure to make a lower low, the break of the counter trend, because that's the previous high that made this low. That's the previous high that failed to make the lower low. And then we broke the previous swing point here. So an entry could have been anywhere within this level, anywhere, probably within that imbalance would have been fine. That's exactly what would have happened. I didn't take those trades. I did not. I've been extremely busy this week focusing on the courses, so I haven't really done a lot of trading. And, to be quite honest, the markets haven't been favorable either. So let's zoom out to a higher time frame. Let's go like the 15-minute. So you can see that we're continuing to push higher. We don't want to fight it. We have actually formed equal highs. That high right here, ladies and gentlemen, did not take out that high, even by a pip. It didn't do it. So these are still technically equal highs. So what we're doing now is we are retracing. And what I want to see is I want to see all this imbalance get filled up, right? There's a ton of imbalance right in here, just straight buying volume. And just from a basic structure standpoint, we have a high, we have a low, we have a higher high, we want a higher low. We just want to get deeper down into discount for a higher high to take out buy-side liquidity. We have buy-side liquidity here. Obviously, we are in an uptrend, so we want to continue to look for longs. We have a level of demand in here that we have failed to mitigate. We have imbalance, and we also have that psychological level, 141, pretty much to the T. The high of this wick here is 141.006. So that's where we're going to be placing it. You could probably place it a couple pips above for the spread just in case we do get a precise entry. But you know what we could also be looking for is more confirmation, right? This could be a skewed retail head and shoulders. Some sort of shoulder, some sort of head, some sort of shoulder. We fake out below, entice traders below that neckline of the skewed head and shoulders, and then we go long and take their stops. Would give us more conviction for buys from that level. So that would be a really good trade to take. So we'll keep that on our radar going forward. Chef JPY, Euro NZD. So with Euro NZD, it's a little bit tricky at the moment because I want to see GBP NZD go long. I want to see, you know, the Aussie dollar and the New Zealand dollar weaken. So with that being said, I naturally want to be buying Euro NZD because we have a great opportunity to. We are making higher highs, higher lows. However, if we look at the 4-hour time frame, we're still forming retail patterns. We have a touch here, we have a touch here, we have a touch here. I was really hoping that we would get down into here, sell to buy, take that liquidity, maybe come into an area of demand in here or imbalance to where we swept liquidity here, something like that for continuations long, and then pull back and go. That would give me more conviction that this is going to go long. We haven't done that yet. So the possibility of us coming back down, we could see that. However, lower time frame, we're continuing to push higher, right? We have our level of demand in here. We swept liquidity. We came into that level. We have broken the counter trend structure. Low, high, low, high, low. You can see that wick right here. That's sell to buy. We made that higher high. Now we're starting the overall uptrend again. High, low. We have failed to make that lower low, and now we're starting to push back to the upside. So if we scale into the 15-minute time frame, what we can see is just simple structure, right? High, low, high, low, high, low, high. Okay, just basic. So what we want to look to do, and we can see in here that we had sell side liquidity. Now, price didn't have to necessarily take that low. It could have reacted somewhere in here, formed a higher high, higher low, higher high. It could have done that. But because of the fact that it did, it swept sell side liquidity and then made a move back to the upside. We had the low, the high, the low, the high. We failed to make that lower low, so we repriced and we made the higher high. So that will flip again from supply to demand. So that's a really good sign, right? We had the liquidity run, we had the repricing, we had the higher high. So what is this? Higher low, or excuse me, yeah, higher low, higher high, looking for a higher low for another higher high. Just continuing with the structure, understanding that the probability of us going long here is higher than the probability of us going short. So if we can put together the concepts that we know works, we have a decent probability or high probability chance that it will work out for us, right? So why would you be so concerned about price going short? Now, if it does, because technically we do have higher time frame sell side liquidity here, that's a potential. And if it does, then you know what, we look to buy at discount and we'll just wait for another setup. But if we have confluence to go long, shouldn't we still be looking to buy it? So we have sell side liquidity here. I love to see this. I love to see stuff like this because it forms maybe a trend line, forms sell side liquidity so that we can go run it, free it up, make a higher high, mitigate this demand. So that's what I'm looking to do. So looking to take a trade from 1.68350. Look to continue with the longs because if we're in an uptrend here, really higher time frame and at this current time, lower time frame, the probability of us going long versus short is high, right? So just keep that in the back of our mind. Again, nothing is 100%, of course. You know, we could have the best looking setup but still lose it. But that's just why it's a game of probabilities. Euro JPY. So Euro JPY, I'm really not interested in looking at anything in here. It's really just chop, to be quite honest with you. We're actually forming, oh wow, we did another, look at that, perfect. So this is actually really good because we're looking for long. So the more buy side liquidity or retail shorts people get into, the better, right? So we can see we have equal lows and we have a descending trend line. So this is good for, conviction that price will come and take those lows, come into our levels, and then make a move back to the upside to take buy side liquidity. We like to see that. So scaling out here to the higher time frame, I know it looks crazy, but in all reality, we are still higher time frame bullish. As we can see, we're pushing up high, low, high, low, high, low, high, low. This is a higher high compared to that high, but we made equal lows. That's why I fully expect price to come at least into 137, our last point of demand, for continuations into our higher time frame level at 150, psychological level as well. However, if we scale into this, we can see that we are counter trend bearish at the moment. Low, high, low, high, low, high. Swept all this liquidity right in here, came up into the imbalance in supply. And then we look at the counter trend when we sweep liquidity here, high, low, high, low, high, low, failed to make the higher high, lower low. So this is still the range. This is the high that created this overall low. We have buy side liquidity, descending liquidity that we want to go and take. If we run it, this would just, all of this, guys, would just be one overall pullback. Just a lot of noise. All right, one overall pullback, mitigating that supply to take it down short. High, low, high, low. It's just market structure, and it doesn't look pretty because it's not always going to look pretty. It's not going to look perfect every single time. That's why nothing is going to be a step-by-step, because it's going to be different every time. But the concepts still apply. This is still a demand that it was invalidated because we failed to make a higher high, obviously because we are counter trend bearish now. So that failed to make the higher high. We made the lower low. We have a lot of imbalance to fill. So we want to come back up and mitigate that region of price. So we have sell limits at 143.86. I shouldn't be posting this risk to reward. I forgot to delete it, but there you go. There's your free signal. Totally forgot to do that. It's on me. Anyways, equal highs here. That gives us more conviction that we're going to go long, more than the descending liquidity here. So if we scale into a lower time frame, we're currently bullish at the moment, right? We're making higher highs and higher lows here. So that would tell us, okay, we're currently bullish. So if we find a counter trend buy setup before we come into 143.86, that would give us conviction that we have room to go to the upside, that we are likely to go long and win the trade. Then we turn around and sell it from our higher time frame level, and then we can sell it back down into 137, which is that higher time frame demand. So currently here, equal highs, we pulled back. All of this is just mitigation trends on the lower time frame. Mitigation trends after mitigation trend. So in here, we swept liquidity. I know it's just very odd looking, to be quite honest. The price action is quite erratic. We swept that low, and we swept this low here just by a couple of pips. We wicked it. We pushed up. We failed to generate the lower low, and then we blasted, made the higher high above that previous swing high. So just taking it from a market structure standpoint, high, low, high. What do you expect? Higher low for a higher high. So we're not in discount yet, right? We pull a fib from our high, or from a low to the high, and we can see that discount is at least a 50%, but we want more discounts. We don't want to be buying in here, right? Now, okay, I shouldn't have said that. We could be buying in here if we do something like this. If we go like this, boom, boom, we don't come into this level, but maybe we sweep these equal lows, sweep the sell side liquidity, maybe create equal lows, break structure back to the upside. So a very violent move sell side, just a clear sell to buy. That's what we would be looking for. And then we could potentially pull back and mitigate to go long, right? But we haven't done that, and I don't know if we will. So for the time being, these levels of demand are definitely valid. Looking to buy from each one of those. 1 to 6, and then a 1 to 4.83. Just up until our level here, in which we can turn around and sell it for a nice 1 to 3.5. See, I'm not aiming for 1 to 50s, guys, because what that would require is a significant amount of losses before a particular home run could be won, right? See, the more precise you want to be, the more scaled in you want to be, most likely you are going to see a drop in overall win percentage. It doesn't mean you're going to be not profitable. You can definitely be profitable with less than a 50% win percentage, 100%, because it comes down to risk to reward. So, are traders willing to lose 5, 6, 7 trades in a row potentially before hitting that 1 to 50? Most likely not. You say you might, but when it comes down to it psychologically, you're not prepared. So what that does is that creates a lot of problems. Revenge trading, over leveraging, and then it screws up your whole trading plan. Are you willing to lose more than you win, but still be overall profitable with your risk reward? Most likely not. That's just, I have to say that in general for all traders, most likely not. And I'm sure there are people out there who have really good psychology who can do that. But for me, even though I have developed a good sense of psychology and understanding, I still don't want to trade that way because it still affects me. And I know how it affects me. So I want to trade from like just relatively, higher time frame levels, just because if price, comes into here, we have a lower time frame break in the 1 minute time frame, but we then just come back down and just make a lot of noise before going long. Great. I'm still in the trade. I'm not having to worry about it. I can set my limit orders. If it makes a lot of noise and chops around before continuing, whatever, because I'm still in the trade. But people who are, trading 1 minute time frames only, they're getting stopped out left and right before the real move occurs. Sometimes, yes, you will catch a really big trade for sure. However, it just creates more losses before, a potential win can occur. So that's why I'm okay with a 1 to 6, 1 to 4.8, and a 1 to 3.5. Still a really good risk reward at the end of the day. GBP NZD. So this is really cool, guys. And I don't see why we can't go long here, and I'll explain why in a minute. What does this look like to you? If I just scale out here, does this price action right in here, does this price action look very similar to this price action? This is why market fertility is so important, right? Everything happens on every single time frame. Just because you may be looking at the 1 minute, it's the same exact thing as the 1 month, right? Because it's the same concepts, right? The market is we don't trade a strategy. We trade the underlying components, underlying nature of how the markets actually move, right? And I can prove that time and time again, just based upon simple liquidity runs. I mean, you have to understand how buyers and sellers interact and where the money is. How is a market actually moved? It's not moved on support and resistance. It's not moved on trend lines. It's moved on orders. It's more moved on liquidity and volume. So we can see here prior to a higher time frame level, this is oftentimes what occurs. We can easily see that here in AUD NZD, right? Higher time frame demand. I've already went over this plenty of times. Well, what do we create? Equal highs, equal lows prior to the level. So what do? Entice buyers, get the buyers in the market, go stop them out. Entice sellers, go and stop them out. Now the real move can occur. Now every one of the retail traders or everyone who's trading all that is now shaken out of the market. We can continue to trade it. Or that's what the institutions would say essentially. So, right in here, same thing with the COVID crash, right? This is in 2022. This is when we had the huge pound sell-off. So what did we do? Well, it was the excuse to sweep sell-side liquidity. You know how much volume or liquidity is resting below these lows, especially if you have 1, 2, 3 touches, right? And a break of this structure. People are looking to pull back and long it. There's probably so much liquidity resting below this level that they had to just sweep it like that so violently. Entices sellers as well, and then we immediately push back to the upside. So again, sell to buy, reprice, continue. It's that simple, but it just takes practice to be able to do it consistently. So we had a lower time frame level of demand within this higher time frame repricing. Okay, so lower time frame demand. I'm not going to really get into that, but just know that is a low time frame. You can check it out by yourself as well. So prior to coming into this level, we can see in here we didn't come into it. We create buy side liquidity and we create sell side liquidity, trying to entice traders because we knew the market was going to break out one direction, trying to entice traders to take a certain position. So what happens? Well, we create this channel. We have 1 touch, 2 touch, we have 3 touches. That's why we started to sell off there. Retail was in that. And then again, sell side, we have 1, 2, and 3 there. So retail is trading within this space. Once it breaks out, they're looking to buy it. Not only that, they're looking to take it off the break and retest to try to go long. Well, that's why that just doesn't work. So what do? We buy to sell to buy. Okay, we come into that level of demand and now we can go long. We shaken buys out, sells out, and now we can continue with the overall long to the market. Same thing goes in here. Where's the counter trend? Low, high, low, high, low, high, low, high. Failed to make that lower low, higher high. So the trend has been broken. And again, the same thing comes into play. 1, 2, 3. kind of 1, 2, 3, 4, 5 touches there. So we know we have buy and sell side liquidity. So again, what do? We buy to sell to buy. The same thing happened over here, just lower time frame. So it's not that the 1 minute is different than the 1 month. They're all the exact same. It's all just a matter of perspective. So remember how we came into demand here? It's the same thing in here. That was the repricing demand. And so we bought to sell. We came into that demand level. And just like we created the repricing here, we create on the lower time frame the repricing here. So I actually took a position here yesterday. But now we can see that we have, again, within this sell to buy, formed a low, a high, a low, a high. We've reacted off that supply. So let's get rid of this so you can see it. That supply in here, we have failed to make a lower low, and we made a higher high in comparison to that previous swing point. I really want price to get back above that high. If we can do that, that would be really, really good for me. And we're going to make a fat chunk of cash if we do that. So again, you have to use good risk management, though. It doesn't matter how good the trade setup looks. If we end up breaking lower, if you're over leveraging, it's bound to happen eventually. You're bound to over leverage when you get a really, really good trade because you don't have good psychology, and then it rolls over against you, and then you wish you didn't. So always, doesn't matter how good or bad it looks. Obviously, if it's bad, you don't want to trade it. But if it looks good, confluences are there, rules are met, use good risk management. So anyways, we're forming. We actually create equal highs. This high, not quite equal highs, but we have come up and created buy-side liquidity. We also have generated buy-side liquidity here. 1 touch, 2 touch, 3 touches of that trend line gives me more conviction that we are to go long and take buy-side out. So that helps with our buy setups. So we currently are in a little bit of profit here on this trade that I sent out last night. So if you guys took that, continue to hold, stops would have to naturally go below this low here. All right. So that's GBP NZD. I'll have Aiden kind of go over USD CAD. I'm not sure if he has anything on USD Swiss franc. It's pretty much the exact same thing, so I just won't discuss it. NZD Swiss franc. The really only thing I had on NZD Swiss franc is, the fact that we are continuing to push higher. Right? We have a higher time frame level at 0.62. Really, this is what we're just trying to get back up into premium price. We can see that this is a low. We can see that that's a high. We can see this is an overall lower low. So we just want a deeper retracement. So where can we see that occur? Whoops. You can see that occur in here. Really, this is just, our last sort of buying volume before the major sell-off. We have imbalance in here, 6.2 psychological level. Looks good, right? We're currently bullish. I know it's blurry. I'm just zoomed out, guys. I'll zoom in a minute. We're creating higher highs and higher lows. So, we want to be looking for buys. Now, we haven't quite taken out this previous swing high. I do think we will, though. So I'll just mark that off, and I'll make it very precise for us. So our high is 60331. 60331, perfect. Okay, so that's really what we want to take out first. So our first take profit will probably be that level. So we can see in here that made a high, made a low, made a higher high. When we pulled back, we mitigated that demand, filled the imbalance, which at this point, this demand and imbalance was also a sponsor candle, lower time frame. We swept these equal lows, lower time frame, sell to buy, which actually came into this demand, mitigated that level, and that's where we started the uptrend. So we came into that level perfectly, and then we started to accumulate, and then we expanded, right? So let's see the counter trend, low, high, failed to make that lower low, higher high. So again, what do? We build liquidity prior to coming into a level. Build liquidity, boom, run it, free it up, come into lower time frame demand, that last point of the accumulation, lower time frame. It's better scaled in. I just don't have a lot of time to go over everything. But we come into that level and then we make a higher high. So higher high, higher low, higher high. Now we're creating liquidity here, right? So now we're starting this kind of pullback, and hopefully we'll come into that last level of demand right there to then go long again. So it's just basic structure, looking at supply and demand levels. In this case, this is our last selling volume that failed to make a lower low, higher high. So that is really our point of interest here for continuations buy side. We can also see that we are creating relatively equal highs in here. So that's actually really good. So that's more buy side liquidity to run as well. NZD Swiss franc. AUD NZD, this is the last one I have. So AN, I mean, obviously, I remember we talked about this, right? Before that higher time frame level occurred, we had the buildup of liquidity. Now, what's really cool about AUD NZD is just the precision within the levels. So we can take a look. I mean, I've already talked about this plenty of times, but for anyone who's new, I can quickly go over it. I know it's blurry. I'm just zoomed out here, right? So not equal lows. We did take out that prior low from 2015. In 2020, we did take out 5 years worth of lows. So we finally came down, swept that liquidity, that low, and then we had an immediate reaction. In the process, we did the same thing. We created more liquidity. Low, low, and low. 1, 2, 3, 4 touches there. So again, trapping retails long before taking short. So sell to buy, reprice, continue. Repricing, in its simplest terms, is just the break of structure. Where was the last selling volume or the last buying volume, depending if you're in an uptrend or downtrend, before the break of structure occurred? So if we see this as a low, a high, a low, and then a higher high, where did this counter trend break? Yes, it broke right here, but that's not the repricing this is, because this is the last selling volume. We came back up, and think about it like this in terms of retail, guys. This is where we get more confluence. 1, 2, 3, 4 touches. Okay, great. They're buying. Nope, they lost. It sold off, right? Okay, now they're changing their bias. Now it's a break and retest of the trend line. They go and take it short. Sellers fail, right? Because it's not meant to go long or short. It's meant to go long. We push price higher. So that's exactly what occurs. So we had that repricing there, our last selling volume before the break of structures. That's exactly where it comes into here back in 2021, so a year later. And again, creates this low, and then it breaks the counter trend structure, trapping retail longs, and it finally rolls over and comes into the level. That's why objective is so important, guys. Because how do you know that this when this counter trend breaks and we're going long, how do we know that we're most likely not going to just continue? Because we didn't come into our level. Now, I'm not saying we should only look for sells in here. I mean, price could easily just continue long. And if it did, then we just had to let it go. But in hindsight, this was just used as, liquidity to come and take. And it actually did come and fill this level of demand there. So let's scale in again. We had that reaction. We blast off, have a very strong reaction. We pull back into this demand. We failed to make a lower low, and we made the higher high. So where is the last selling volume within this pullback? Well, it's right here. This last sell to buy. Start of that was 1.05 psychological level. Structure, higher high, higher low, higher high. What do we naturally expect? Higher low before another higher high potentially. So we came into that level precisely. We scale in, and again, that's exactly what happens. We generate buy and sell side liquidity before the level, enticing buyers, coming back down, sweeping them out, enticing sellers, coming back up with the real move, sweeping them out. Everyone is being shook out of the market before the real move occurs. And now we just continue with the trend. High, low, high, low. We mitigate the previous swing point, making a higher high. So we could make a higher low for a higher high. So this is the structure now. High, low, high. So if we start to pull back, this is the entire range, right? So we could pull back like that. This is not a break of structure. If it goes like this would just be an overall pullback for continuations, because this is one expansion, one pullback, one expansion, right? Just like this was one expansion, one pullback, one expansion. Yes, we broke structure, quote unquote, but it's not a real structure break. It's just an overall pullback for us to continue since we're overall bullish. Okay, so we have two levels. We have a lower time frame and a higher time frame. This demand has already been mitigated with this, right? This is our nearest area of demand here. Imbalance still needs to be filled. So one of two things could occur. We could have an overall pullback back down into 1.08532 for continuations long, or we could continue with the lower time frame structure like this, high, low, high, low, high, low, high, low, and just keep going like this. We could. Eventually, we might have an overall pullback, and we just have to understand that it's not a break of structure. It's just an overall pullback to go long again, because this is just, again, one expansion, one pullback, one expansion. So it could continue with the lower time frame trend, or we could see an overall pullback. So if we get a pullback, I am interested in this 15-minute level of demand here. If we just look at the counter trend again, low, high, low, high, low, high, low, high, low, high, failed to make the lower low, higher high. And this is really where we expanded. So we have a lot of imbalance in here. And in this last point of selling volume before we made the higher high breaking structure, right? So we could come back down into here and continue long, that's a possibility. If it breaks and we come lower, then we're looking to buy from the higher time frame level of demand in here. So you have 2 levels. Just go back out and you guys can see those there. Okay, those are my 2 levels on AUD NZD, and that is what I have for you guys today. So I'm gonna turn it over to Aiden, see if he has anything else, and we'll go from there. I think you're muted, bro.
Thanks. Yeah, I'll pull up UCAD in just a second. I'm just reading through these comments. Is Bitcoin Forex? It's pretty common sense answer to that one. My friend and I don't have a live account. Which blocker can I use? I want to open my account. Because it kind of depends on where you're located, Paul. If you're in Europe or Australia.
Yeah, it just depends on what country you're from. I'll just do some research.
I see markets is really good.
Yep.
Fortunately, I can't use it. Blueberry markets, it's good, regulated. Non-regulated brokers, LQDFX, it's a good one. So it's what I use. My personal account outside of the prop firm. So there's plenty of good brokers out there. You just got to do your due diligence, guys.
Mm-hmm. What indicators do we use? We really don't use indicators. I mean, the only thing I would look at if price is starting to accumulate or distribute within an area of interest I'm already interested in, I may look at the VFI to kind of look at, see if there's any divergence. But indicators, as we know, guys, they're lagging. Everyone wants you to use indicators because it lags. It's not real price action. So if you use indicators and you're losing, it's probably why. So we don't like indicators. We just besides what, yes, the VFI is still a lagging indicator, but it could be an indication that it's from a volume standpoint could be reversing. It doesn't mean we're just going to place our entry right then and there, like like regular indicators would tell you. If you break the EMA, then take a long or short. That's just the dumbest thing you can do because it's not real price action. It's not the real way the markets move. But with the VFI is, you can see, okay, is price diverging? Then if you do get a price action sort of move, let's say you're selling to the downside and it distributes and it breaks structure, you can pull back into a level of supply with the conviction that it probably will go short because volume and price have diverged from each other. So that's the only way that we use indicators. Let's see, that's a big stop. I'm not quite sure what you're referring to there. However, Josh, I would just highly suggest you take a step back from looking at how big the stop is and looking what the risk to reward is, right? Because pips don't make you money. At the end of the day, risk to reward does. So I don't care how big my stop loss is because sometimes it needs to be large because it's necessary to put your stop below or above certain levels to protect yourself. But if you have an appropriate take profit and the risk to reward is there, then it's a good trade. So when people say I'll only go for 20, 30 pip stop losses, that just tells me you don't really know what you're doing because you can't just objectively put stop at a specific level that you want based upon the number of pips or what kind of risk to reward you want to see. It's based upon what the market's telling you. So if I have a big stop loss that doesn't yield me a big ROI, then I won't take it. But if I have a big stop loss potentially, but it will still yield me a high risk to reward, well, then it's a good trade because we make money based upon percentages. If you think, and I'm not saying you, I'm just saying in general for people who ask, if people think you make money off of pips, that just tells me you don't know what risk management is. It all goes hand in hand because you're going to have a different size stop loss. If you're using the same lot size because you want to get pips, then you're going to be losing different amounts every time. You're not consistent with that, with risk management. So that's why it really doesn't matter about how large the stop loss is as long as you have a good risk to reward with your trade.
Ninho, thanks for the love. Appreciate it. Glad you enjoy it.
Do you charge any fee except course fee? No. So we have just that one all-inclusive payment. Includes all of our course material, kind of goes step by step into how we trade from an exact standpoint. One-on-one mentorship and full access into our VIP Discord channel where we're sending our breakdown videos, trade ideas, analysis, everything that we're looking to get into ourselves. We have payment plan options, but it's either a payment plan or just a one-time fee. Anything after that, there's no charge. We don't like upsells. We don't believe in it. We make our money trading. We don't need, a couple $100 for an extra course. That's why we're giving the course away for free for those of you who are currently a part of our community. For those of you who are not, I mean, obviously it's not free, but we just want you to focus on your education and not about paying for other things. What pairs follow S&D the best? I mean, they all do. I mean, any market, any asset class that you can think of, they all move relatively the same. It's not going to be the exact same in terms of the look of it. But why would the institutions trade one thing differently than another? It's the same principles across the board. Liquidity is liquidity. Volume is volume. So supply and demand is supply and demand. It's just the way that it looks. You may think that it's not following supply and demand the best way because it's your interpretation. Everything moves the exact same. The way that it looks is different, but the overall principles and the underlying nature is the same. So I would say in terms of the looks of it, I would start off by looking at, dollar-based pairs of the majors. So maybe Euro USD, AUD USD, USD CAD. I really wouldn't get into the weeds of the exotics or the crosses that much, just because, it takes a little bit of experience to kind of understand how those move. But I mean, everything follows the exact same principles. It's just a different look of it every time. So, like something like NASDAQ or Bitcoin or coffee, you can trade soybeans or you could trade anything, but they all follow the same principles, but it doesn't look the same every time, or it doesn't look the same as other, asset classes. That's why I like Forex best, because it waves very nicely. The principles show up very cleanly. So I would say, Joe, the answer to that question is probably the majors. I would start off with that.
Definitely. GBP Swiss franc's another good one. I'd like to kind of recommend for, especially those who are kind of new beginners to smart money, right? And applying the concepts to master the concepts, to familiarize yourself with a few markets. So things like EU, GU, AU, the majors, like Nate just mentioned, GBP Swiss franc, NZD Swiss franc's another good one.
Yep.
At least to start, right? And then you branch out, right? You really only need just one pair, to be profitable and be consistent.
Yes, you do, but I would like to say, even though that is true, one pair may do you justice. However, from a psychological standpoint, are you willing, and I'm just asking everyone here, are you willing to not trade for a few days? Can you go a week without trading? Seeing all the price action, see stuff go long, go short, everything. Because sometimes within a particular pair, they may not be a perfect setup every single solitary day. Yes, if over the course of a month or 2 months or 3 or a year or 5 years, yes, if you trade one pair, you can be very successful with that pair. But psychologically, it's not going to work out for traders just because they always feel they have to be in a trade. So I always say, 3 to 5 pairs, maybe 6 is probably a good amount to look at, because it gives you enough to look at to where you're not trying to force trades because you want to be in the market, but it also is not too much in which you're bombarded with stuff and you're not really understanding those pairs. So that's just what I would say about that.
David's got me cracking up. The Ariel Fx chain. No, it's actually a Carolina chain. You go to North Carolina, which is where Nate and I met, went to school together. We're roommates. If you go to North Carolina, you'll see that a lot of people wear this chain. So that's where you'll be able to
thing in the States.
Yeah, it's like
but
I love it. I always wear it. I never take it off.
You can find, I like silver just because, I do like gold, but not really for necklaces, more of like for rings and for bracelets and stuff. But yeah, you can buy, I've had this for 10 years. It's real silver, so it will never green out or fade or chip or whatever. But yeah, you can find it online.
Yeah, guys, who took the USD CAD sell? That obviously we talked about well over a week ago.
I'll have you go over that now.
Yeah, I am. I just want to see who's been paying attention. David did. There you go. Good. So obviously, USD CAD. Yeah, hold on one sec. Nate, are we in Canvas? Are we in? Can you see my screen? Let me know if you can see it. Nate, are you? Can someone in the chat let me know if you can see?
Sorry, I had to run to the restroom. Here we go. Apologize. Sorry, guys.
Drinking too much coffee.
Yeah, I know.
All right, cool. So USD CAD, guys, yes, absolutely melted. I see Josh, you took it as well. It's awesome. This is one that I have been talking about for a long time, at least from a higher time frame perspective. Just go back and watch Smart Money Sundays. Right, really looking to take this thing deeper down into this level of structure, right, where we kind of created that last higher low, significant higher low before this massive expansion to the upside, right? And since then, since we've created this high in the market, right? And sorry, I just haven't deleted a lot of my old stuff back here, so it doesn't look very pretty, but oh well. Since we've kind of retreated from this singular wick high, right? We have been formulating market structure to the downside on the lower time frames, right? Even though understanding on the higher time frame, we are still bullish. And if you hop out to the weekly, 2-week time frame, right, we still have these very clean equal highs, right, which I believe will be the true draw on liquidity on the higher time frame over the next year or so. All right, but that doesn't mean we can't be looking at market structure, trading lower if we still have room to go to the downside and to discount, prior to looking for that next swing long here on UCAD. So 1.3050, really, I mean, this can be that first level, right? 1.321 that we should be looking to as an objective, running out this previous low, right? But really, I think we can dig lower into here where we had that massive institutional push, right? The sell to buy, the massive engulfing, creating this inefficiency here with this candlestick, right? And you can see that price never did retrace, never did refill that imbalance. We just continue to push higher. All right, and so now that we are formulating structure to the downside and we do have room, I've been looking, right, for the recent past, I have been looking at opportunities to sell down into this level here. Right, so you have the market structure printing to the downside, right? You have our lower high here, right? Which mitigation trade. This is a beautiful opportunity that we talked about a long time ago, back in October. Right, we had the 8-hour up close here that printed a lower high, which produced a new lower low, right? And then we had a pretty long pullback phase, right, back up into premium, where I gave you all this opportunity here, this 8-hour up close as well. We distributed in price, right? We had that last kind of push higher, failed to create a higher high, and broke lower. All right, and so this was another opportunity, right, with this box here that I also gave out, right? So we've really been in tune with this market. Why? Because things are in alignment, right? We understand we have a higher time frame objective. We have a bias, right? In terms of where price needs to reach before potentially seeing that change in character and that shift back up to the upside on the higher time frames, right? So with conviction, with a real true objective that we have confidence in, that gives us added confluence and conviction behind our intraday trading, right, in the direction that we should be looking to take these trades. All right, so this was the opportunity from a couple of weeks ago, right? And here that Nate and I talked about, we talked about potentially trading up higher into 1.36 as well, right? Filling in some of this inefficiency, but that never happened, right? We just traded into this initial area of supply, right? And then we kind of spilled over from there, right? Creating this new lower low relative to this high here, right? And so what I was doing was looking at this as internal liquidity, right? This high really didn't trade into anything, right? Didn't trade into anything. And so when we ran the lows, right, I was then looking at this area as our draw on liquidity inducement, right, to be run while simultaneously mitigating true supply, what we needed to come into to begin with. All right, and that was that 20-minute candle, that 20-minute up close. Just go back and, VIP members, from daily market breakdown videos, Smart Money Sundays, this specific level was obviously given out, right, with the up close. And that's what we came into yesterday to the T, right, to the T. And we've now since run out these relative equal lows here, right? So beautiful opportunity. It's already up almost 1 to 6. Should continue lower in my opinion. Whoops. Now for the here and now, again, I'm looking at, because we have conviction behind where we're heading. We have an objective. We should be looking for excuses to continue to sell this thing alongside dollar weakness, Canadian dollar strength at the moment, right, into that objective. So then the next logical area that we should be focusing on, in my opinion, is going to be this bit of supply here, right? Potentially do the same type of thing, right? You consolidate, right? Maybe run the high, run the low, right? Inducement, internal liquidity here, mitigation, continuation, right? It's the same logic. It's the same principle printing itself over and over and over again. It just doesn't look the same. And that's part of the problem that a lot of people have is they try to memorize what something has looked like in the past from a physical standpoint, when in reality, nothing is ever going to look the same in the future as it has in the past, right? In terms of like a pattern or candlestick formations or anything like that. But the same logic prints itself over and over and over again. So and that's why we stress you have to master and understand the underlying logic, right? Because that is always repeating itself in the markets, but not necessarily the patterns or physical representation of price itself. All right. And so, again, looking for some bit of consolidation here, right? To kind of buy to sell, to buy back up into our level of supply where we should be looking to print that next lower high and our next lower low in the sequence. All right. So hopefully that makes sense. Again, 1.321 is going to be that first kind of area that we're going to be looking to kind of scale out of these trades. But I do think we can trade lower into 1.3050, if not 1.3. All right.
USD Swiss franc looks very similar.
Yeah, I was going to briefly touch upon that one as well. Obviously, we gave this one out a few weeks ago, this selling opportunity here, right, with the up close candle, right, after running this liquidity here, buy to sell, creating that new lower low, retracement into premium price, up close candle supply, very easy, very clean opportunity. That's a layup setup right there. All right, then we have our kind of retracement here. This high didn't really come into anything. There really wasn't anything significant. And so we did trade lower, right, running out some internal liquidity, then ran the high again, and now we've spilled over. We've breached, we've invalidated demand, right? We very easily could have respected this and then continued higher, but we didn't, right? We invalidated it. We had our kind of demand to supply flip, right? And that's what I'm looking at in terms of a retracement for that continuation. So again, same logic, right? I want to see that consolidation, maybe run the high initially, run the low, and then run the high again, right? It's the logic, right? It's understanding the fact that when these moves happen, right, they want to weed the retail traders out, right? It's never simply as easy as just low, high, right? Some, occasionally it is, but more often than not, you see some sort of push higher first, right, and then the lower low, and then all of a sudden you think this, is going to be a protected high, and then we actually run that very quickly and then spill over, right? It's the same with what happened with USD CAD yesterday, right? So I really look for that kind of logic to manifest itself over and over and over again, no matter how it necessarily looks. It's the logic again. I have to emphasize that.
But it's also good to understand that, try not to memorize that specific pattern that he's showing you. I mean, it's definitely good to understand what it's doing. It's, it's pushing higher, enticing buyers, then taking it short, enticing sellers, coming back up and taking the seller stops. So that may not look like that, guys. It may not actually do that. That valid zone that he has, or that supply zone that he has drawn up there with the box, is a valid level, right? In terms of liquidity that has been run to the upside first before the overall lower low is formed, that is a valid level of supply. So price could come up into that level. We would still sell it regardless, and then it would shoot down, right? Hopefully. However, what we would like to see is what he has drawn. We would like to see price push up, run the lows, run the highs, and then go short. That's what we would like to see. Now, that doesn't mean that we're waiting for that exact thing to happen. So don't think that if price doesn't do that, then that level is not valid. It's still a valid level. However, for a more highly probable setup, from a smart money perspective, seeing something like that gives us more conviction, because what is it doing? That first purple push, that with his purple marker, that first push he drew, right? We're pushing up, pulling back, and then we stop. We fall to the downside. So what does that do? That attracts sellers into the market. It also takes any buyers who were originally long, takes their stop losses below the prior low. Then what happens? We haven't come up into the real level yet, so we push back to the upside, taking the seller's stop losses. So now we're shaking everyone out of the market. We have finally come into that level of supply. Now we can continue with the real move. So that is the concept behind it. So if we get something along the lines of that, it would make sense for us to sell it there. However, it doesn't necessarily need to occur. If price just ends up pushing back up now and starts to trickle up into that level, I will still be looking to sell it from that supply.
Mm-hmm. Awesome, guys. Appreciate it. All right, so that's CAD and Swissy.
Yep. So entry now would be cool. No, absolutely not. So remember, we can't just get in because we have a conviction that price is going to move in a certain direction. So in all reality, guys, look, let's just take a look at it from a structure standpoint here. Okay, USD CAD. If you get in now, where would your stop loss be? Your take profit would be 321, maybe a little bit lower, but you would have to place your stop above the prior swing high, or at least above the prior level here. Let's just say you did that. That's less than a 1-to-1, right? We can't just get in the market because we think it's going to do something, right? We may think it's going to do something, but we have to be smart about it, because it's not just about getting the direction right. It's about extrapolating the most money possible from the market. And that comes down to win percentage and risk to reward. We need to be looking to sell at premium prices. We don't want to be selling at discount, right? This is discount down here. We want to see the pullback into premium levels to sell off, right? Let's say you're selling a pair of shoes that are worth $100. Do you want to sell for $20? Absolutely not. You don't want to sell at a discount because you know you can make more money off that. You want to sell at a higher price. So that's why we have to wait. And if price just continues to trickle down, doesn't matter, because we're already in the trade here. If you're not already in the trade here, this is a situation where you just let it go. Don't have FOMO. Don't have any of that, because I guarantee you, if you sell it here and it goes long, you're going to lose. We have to be smarter. Let's be more professional with it, right? Let's not have the sense that we always have to be in a trade. If this level is not met, we don't enter again, unless we see something like this. Unless we clearly form a clear buy to sell, when Aiden had already said it could actually go like this before coming lower. However, if we take buy side liquidity at the right time of day and we make a lower low, potentially we could mitigate and go short. I would take a small position here, potentially. We still have this overall level. So if price ended up stopping us out, well, then we enter here when it pulls back. But because of the concepts, right? Equal highs, buy to sell maybe 3-4 in the morning Eastern Standard Time. So that's prime London session open. It pulls, or it makes a lower low, pulls back during New York. Then we could be taking a position because it could respect the lower time frame structure here. It could, if that sort of thing happened. But overall, we want price to get back up into here. So no, I would not recommend selling now because we need to get back up into the premium price into our valid zone before doing so. There's nothing valid in here yet, right? See, that's where your psychology is a little messed up because you want to be involved in something that other people are involved in, right? And then that just leads to a lot of other problems. So USD CAD is going up, not down. Well, I think it's going down. I mean, it looks like it is, doesn't it? Selling off. Right, guys? Yeah, sure. Higher time frame it is. Right? Higher time frame, we're bullish. Right? We're making higher highs and higher lows. But as of right now, we're shorting off. We have objective at 1.321. We have equal lows right in here. We have a demand zone, daily demand, that we have not come into the selling volume. So as of right now, we are going short. There is nothing saying we're going long. We actually even tapped into that daily 50 EMA. So, I mean, you can buy it if you want. That would create a lot of liquidity for me to sell it. So, I mean, I'm not trying to be a smart ass. I'm just trying to be realistic. I mean, we all have different perspectives, and of course, I'm going to respect that. However, from my own opinion, we have more sell-side liquidity to take. We have an area of demand that we need to come into. We're overall bearish. The dollar is extremely weak, guys. The Canadian dollar is strong, which is why we've seen that push down. So right now, yes, we are in a downtrend. We are going short. Not to say that higher time frame we're not going to go short. We could, because higher time frames, if you zoom out, we are definitely bullish. But at this current time, the counter trend and the objective has not been met. We're bearish. Please show where you enter. I think we did.
On USD CAD, yeah, just look at our Instagram. You'll see my entry on it.
Yeah. Yeah, the supply zone. Yep, that's right.
Yeah.
Let's see.
We trade the levels that we send out.
You can drop that handle, buddy. Love the straightforward answers. Yeah, guys. Please don't take anything I say personally. I'm a very straightforward person. I don't sugarcoat anything. That's just who I am. I say what's on my mind, and I think that helps a lot of people. Because at the end of the day, I'm not going to be a nice guy if you're not thinking the right way, if your mentality is not where it needs to be, or maybe what you're doing is not correct. Like, I'm not going to say that's okay, because I'm not here to be nice. I'm here to teach. That's how my mentor was. He was very hard on me, which is why I am where I am today. It sucked, right? But that's just what needs to happen. So I'm going to give you the answers that you need to hear, whether you like it or not. If you like it, great. Hopefully you'll do something with it. If you don't like it, well, then you can obviously just drop the live session. You don't have to be on. And I'm just speaking to everyone here, right? Because at the end of the day, I'm here to teach you guys. And sometimes, yes, it's a little harsh, me telling you no, that's very wrong. But me telling you it's very wrong and hurting your feelings is probably going to end up, doing better for you in the long run, because you're going to get the answers that you need in a very straightforward way. So that's just who I am. But yeah, I'll drop my my website here. You guys can check out what we offer, what we provide, what we do. And if you guys are interested in learning more about how we go about breaking down the charts and stuff like that, and you wish to learn more about trading from a smart money institutional standpoint, and you want to learn directly from me and Aiden, we do one-on-ones, personalized mentorship. Feel free to book a call with us. We'd love to talk to you how we can best help you.
Absolutely.
And guys, you guys can send me messages too. I'm not going to be like the person who says, "Oh, you're not a part of my VIP community. I'm not going to help you." No, if you have a question, I'm going to help you. Right? But if you wanted that more streamlined process, going from A to Z, working with me directly, seeing the trades that I send out to my VIP community every day, seeing the analysis, seeing the step-by-step, courses. I wouldn't say step-by-step. It's nothing step-by-step, right? Because it's not a science. It's an art. However, it's a streamlined process. What do we look for first? Higher time frame and lower time frame trends are what we look for, but it's not going to look the same every time, right? So that's why I say it's not step-by-step, but it is a guide to, to break down the charts from a way that we look at it. All right. Any other questions, guys? Anything else you guys have for us? I appreciate your time today. Thank you very much. Remember, this is the last live session that we'll have on Wednesday. We will have our last one on this Saturday. And then what we're going to do is kind of switch up a little bit and do some YouTube videos for you guys. I'm going to be posting here on the Trading Nut YouTube channel, just doing some, basic, surface level stuff, just a basic understanding for those of you who are interested in smart money or, kind of looking to refine a little bit. I'm going to provide a little bit of value. Obviously, I do save the majority of the value for the VIP community, but do want to help you guys as much as I can. So we're going to be stopping the live sessions after this Saturday for about a month. So we won't be holding those, but we will be posting some YouTube videos for you all. So definitely stay tuned for this last live session on Saturday. It is 10 a.m. Eastern Standard Time. So what time that is for you guys around the world. Obviously, if you guys are not able to join live, well, then that's okay. We have the recordings posted right afterwards. Not to worry. Okay, quickly. Sorry, NZD Swiss franc. I think I talked about that earlier. Just go back and watch the recording. It's about halfway through. I talk about it. I'm looking for longs around 5,870, that area of demand. And remember, guys, these are not signals. Okay, this is just overall analysis. Sometimes I say, hey, I'm looking to buy from this level. I may not actually buy from that level because it's just what I'm looking for. Maybe I will scale in and wait for more confirmation. Maybe I don't get that confirmation. I end up not taking the trade, and then it ends up going short and hits the stop loss because maybe you guys take it as signals. Remember, this is not a signal service. This is here to help you understand directional bias, help you understand, just what we're looking for and why. The most important thing is why. Right? We give you these levels to help you kind of guide your trading, to help you understand what we're looking for. But the most important thing is why. What are the underlying components, and why is this the most valid area? All right, last couple of questions, then we're going to head out for the day, guys. I appreciate your time. What advice do you recommend for someone who wants to engage in prop firms? Very good question. So I would recommend at least 3 to 4 month track record of consistency, 3 to 4 months of consistent results. Treat it like an individual trade. If you don't have confluences for a trade, you're probably going to lose it. Same thing with prop firms. If you're not already a profitable trader, probably not going to be a profitable trader with a prop firm. Because not only do you have to pass phase 1, you got to pass phase 2, and you have to be profitable your first month in trading in order to receive a payout and get your money back from the prop firm at hand, right? The challenge cost. So that's 3 months. That's an entire quarter. Entire quarter of consistency with someone who is not consistent is probably not going to work out for you. And I'm not saying you specifically. I don't know how you trade. I don't know what your profitability is. I'm just saying in general, that's how I would treat it. People who lose are the people who want instant gratification. People who want to make $1 million overnight. People who want to just jump in and flip accounts. Those are the people who will always lose. They will always be living paycheck to paycheck, and they will never, ever see success in their financials at all because that's their mindset. And think about it in terms of an institutional standpoint. These institutions have the money. They control the market. There's liquidity on one side of the market. Everyone is doing one thing. They're going to do the opposite. Take that liquidity. You're going to lose. They're going to win. It's the same thing. You follow the masses, you're going to get slaughtered like sheep. I mean, that's just what it is. That's what we say. Observe the masses, do the opposite. Observe where liquidity is, do the opposite of what retail is doing. Same thing with prop firms, right? Don't do what everyone is doing. Don't jump on board. Don't try to have that instant gratification. Don't try to make $1 million overnight. Use good risk management. Take the time to develop the skill first before making the money. If you're focusing too much on the money, you're just going to end up losing. If you focus on the skill first, then the money's going to come. So I would just recommend having at least, 2, 3, maybe 4 months of consistency within your trading. And if you feel really confident after that, then maybe trying a challenge. So that's just my 2 cents. All right, guys, I appreciate your time today. Thanks so much. We will talk to you all on Saturday. Have a great rest of your week. And I appreciate your time. Thanks so much. Cheers.
All right. Cheers.